Hi everyone, welcome back to my channel, in the money options trading and education, and welcome to the third video. In this video, I will provide my views on the upcoming tech earnings and how we can profitably trade this event. As I mentioned previously, it is important to put theory to practice, and this video follows my primer on options, so it is more newsworthy than educational. Anyone who has been following the markets lately has observed that 2022 was a wild year which produced more new lows than highs for the broad market indices. Interest rates have not been at these high levels in over a decade, so most traders and investors found themselves in uncharted territory. While 2023 has started on a more optimistic note, there is still significant uncertainty over this year's market trajectory. In particular, technology stocks were beaten up badly in 2022 and have had a wonderful start to 2023. The upcoming tech earnings represent one of the first real tests for the 2023 stock market rally. The four largest companies in the United States are all tech companies: Apple Inc., Microsoft, Alphabet Inc., and Amazon. These four firms alone represent a significant portion of the broader S&P 500 index. Hence, any disappointment in upcoming quarterly earnings could have broader ramifications for the broader market. Microsoft's earnings came out today and actually beat analyst expectations, fueled by growth in their cloud unit. Shares soared by 4 to 5% during and after trading hours. The other three companies will report earnings in February. The analyst expectations for this cohort of companies is not high, even after Microsoft's surprise news. Expected revenue growth is a tepid 2% for each of the four largest firms, except Apple, which is bracing for a 1% decline. The COVID pandemic ushered in a technology boom, which drove share prices in these companies to incredible levels. Workers were hired to keep up with the demand. However, the lifting of interest rates put a damper on the growth of the tech sector and helps to explain the sell-off throughout 2022 in tech. Coupled with more stringent regulations and fears of a recession, tech companies are adapting to the new market environment by cutting staff, particularly staff that was hired during the pandemic. With all that negative news, you would expect 2023 to be another disappointing year. However, returns in 2023 so far have been positive for those four companies, ranging between gains of 7.8% for Apple to 15% for Amazon. The bullishness is likely due to the expectation that the Fed will put a halt to increasing interest rates and the weakening of the US dollar. I will now illustrate a technique to trading earnings profitably while leaving significant room for error. Taking Apple as an example, earnings are coming out February 2nd. Earnings season is typically a time when options exhibit unusually high implied volatility and hence higher than average prices. This is because earnings are typically followed by large trading volumes that then drive the share prices either higher or lower. If we check the options chain, we see that there are options with expiration a day after earnings on February 3rd. We can sell out of the money puts below the current market price of $142.84. For instance, the $135 put options are priced at $137 per contract. We need to be comfortable to actually own 100 shares of Apple at $135 before taking the trade in case the price of Apple sells off drastically. However, this shows that we can earn a decent premium simply from waiting till February 3rd. We will keep the premium without being forced to purchase Apple at expiration of the option as long as Apple's price stays over $135. If the stock price closes on February 3rd below $135, we will own Apple shares at a premium to the market, but still at better than today's prices. More often than not, the options will expire worthless and we will pocket the premium. This is what I meant by playing the casino and not the gambler. I encourage you to come up with your own trading ideas along these lines. We can also backtest this strategy in a few weeks after earnings come out to see how it performed for my example. At the end of the day, nobody knows what the market will do, but I want you to think in terms of probabilities. Selling a cash-secured put out of the money gives you a statistical edge over the long term as compared to simply holding a stock or buying options. There are other techniques for handling earnings, and we will cover those in later videos. If you enjoyed this content, please subscribe and leave a comment for how we can improve these videos. The next video will return to options education.